It's Friday, April 23rd. This is The Street Live. I'm Katherine Ross, and I'm joined, as always, by Jim Cramer. Jim, let's kick it off by talking about the markets. We are firmly in the green now.
Yeah, I mean, I think that we can keep getting this problem. And the problem is everyone keeps saying that there's a lot of inflation, but the bond market says there's not a lot of inflation. And interest rates are up today, but they're very measured. And I think that what's been mattering is the earnings. And the earnings have been quite good. I mean, the only a fly in the ointment earnings today are Honeywell and American Express. And I've got to tell you, I'd buy both of them hand over fist. Kimberly-Clark. That was a very bad quarter. And they've got some inflation issues, but they also have some management issues. That they should come on Mad Money and talk about it because I frankly don't understand how they could be doing so badly. So if you did a good quarter, your stock is doing well, and that is that's an agglomeration of good stocks.
So obviously, investors right now are really focused on this capital gains proposal from President Biden. And you covered this both in Mad Money and your Real Money column from yesterday afternoon. So I want to ask, you weren't against selling just yet. And your point is don't fear the tax man, which
Right.
goes against everything that I'm seeing on Twitter right now. So instead of selling, do you think that this is a buying opportunity?
And then people immediately say that I'm in favor of higher taxes. I mean, I've kind of given up on the people who are attacking me. I just don't even bother to read them. I mean, I used to not bother to answer. Now I don't bother to read them. And it is, I mean, I'll just look and says they make it easy for me because it usually starts with you idiot Kramer. I'm smarter than these people. That's okay. That's life. Maybe they're taller than I am. You can't change tall. Can't really change smart. But there is, I've seen too many people who have given away gains, big gains, because they did want to pay the tax man. And now that maybe the people who are against me have never had big gains, don't understand what it's like to be a millionaire, as my clients were. But they lost a lot of money by being unwilling to pay the tax man in the digital equipment in the data general and Bethlehem Steel Prefers in a lot of the Burroughs, Honeywell, the old Honeywell, control data. And to watch it happen was just so painful. And here it is again. People, if they want to get out ahead, that's fine. But if they just want to get out ahead and there's nothing to do with the companies, that's not so smart. If the company's doing badly, sell them. And this is what you have to do. It's not a flip-flop, but if you own a company and you own shares in the company and the company's done bad for say 3 quarters, then you should sell if you have a big capital gain. Forget about it. Just get rid of it, because by the time you do get rid of it, otherwise the stock could be down badly. That's what I'm talking about. I'm talking about the gulf between where you are and where the stock's going versus taxman. And that's what you have to worry about. And we should absolutely stop focusing on not paying taxes and instead focus on whether the company is doing well or not.
I mean, Jim, one thing that we know happens with investors and happens in general, we talk about it a lot through, everything is this FOMO, the fear of missing out syndrome that people get, investors get specifically. So when they see a big down day, a lot of times they're thinking, okay, it's time to sell to go with the crowd
Right.
and what they're thinking. So how do you prevent that level of anxiety from affecting you?
Well, this is a know your company situation. If you're buying if you're buying if you're buying S&P, an index fund, close your eyes and you're putting in because we know that if you just own them and stop trading them for your retirement account, that's the best way to make money. It just is. We can't have you out on that one big day that all the percentage happens. But if you know your company, then you will view it as an opportunity. If you don't know your company, then you'll view it as a selling. You'll be a panicker. And let's take Ford Motor. Okay, so a lot of people might be up because we recommend Ford very, very long ago. Let's say they're up 40%, and let's say that they were that there is a chance that they are going to raise taxes. but you don't know. I mean, I guess you could sell it and buy it right back if they let you. But I just think that just stay the course for heaven's sake. But if something changes for it, and they're going to start losing billions because of the chip shortage, well, maybe you should sell it because they're going to raise the capital gains next year. You're going to do better. Maybe the stock goes to 6. I don't think it does. But if you think a stock is going down badly, then you should not own it and be sure and don't stay in because you don't want to pay the government.
So, Jim, another thing that you talked about on Mad Money last night was you actually sat down with Intel CEO Pat Gelsinger. I wanted to ask what you think of Intel in comparison to companies like AMD and Nvidia at this point, and if you think that Intel is a buy at all.
No, I don't want to own Intel because um, Intel's fallen behind AMD. And I know that Pat was anxious to say, look, we've great history and I wouldn't worry about it. We're much better than other times. My problem with that is that AMD is like super duper better. I mean, Lisa Su, they are ahead in manufacturing. And this is a manufacturing business. And now you could say, well, they don't use their own foundries. Pat Gelsinger's going to build his own foundries with the help of the government. I said, well, look, if you want to go spend a fortune on foundries, I hope the government will help you. But that there's nothing we can do. We're kind of hooked on the cheap labor of Taiwan and South Korea, and Pat wants to make them here, but the machines aren't coming here. When you look at the flow that we just got from that we just got from land, so I say he's misdirected. He should be trying to go for the 3 nanometer because Lisa Su's got going to the 5. He should do an end around her and go for the 3 and just forget about current stuff. He has the opportunity to do that because he's brand new. But when he told me that the data center was glutted, but Lisa Su is making money hand over fist in the data center, there's something wrong there. And I have to think that that maybe Pat's got an ill-advised position about what's really going on with the data center.
Well, and Jim, I mean, if we put these three stocks in a race, right, Nvidia and AMD would be pulling ahead right now, just with their innovations and the management, and
Yeah.
Intel would be lagging behind. So I'm wondering if you think that there's any possibility that Gelsinger and Intel can kind of catch up to Nvidia and
Oh,
AMD.
yeah. Look, if AMD stumbles, they'll catch up. AMD could stumble. Nvidia is trying to do something. Nvidia's there. Look, Nvidia in many ways is the highest end. Okay, and you're not going to dislodge Nvidia. And Nvidia, if they go after whoever they go after, is going to have a very hard time because Nvidia is a great company. But Lisa Su's well aware of this, and she's doing everything she can with the series of chips that she's revealed. And I don't want to count her out, even though I think a lot of our viewers of this broadcast do. I'm not going to do that.
And your mad dash this morning, Jim, was Boston beer. This is interesting because I think that this summer is the summer that people want to return somewhat to normal. They're looking at vacations, they're looking to go out more now that people are getting vaccinated. So I'm wondering if you think that it's kind of necessary to be in the alcohol space, especially with hard seltzer.
Yeah, I felt that the hard seltzer numbers were extraordinary, about 28% growth. They have they're taking share. Now I know the Corona says it's taking share, and Topo Chico was saying it's taking share because they both have spiked seltzers. I would say this: Truly's numbers were truly fantastic, and there's a nice short position in Boston Beer, and it's just the problem is the stock's at 1,258. People don't want to do that, so they buy deep in the money calls or they buy a sliver, but it is worth buying.
So you think out of Coca-Cola because of Topo Chico hard seltzer, Constellation, you think that Boston beer is the stock to buy here?
I still want Constellation. Constellation is going to get some money, I think, from the Mexican government for what happened in Mexicali, and Constellation has that. They are diversified among a series of spirits, and I want to be diversified for when if the tide turns.
And Jim, I know that you're not management at Boston Beer, but looking at based on what you just said about the stock being at 1,200 as it is right now, do you think that maybe they should consider a stock split to make it more affordable for millennials?
Absolutely. 10 for 1. But what happens is the institutions say, hey, we just had to pay 10 times the amount of commission. You've now made it really difficult for us to beat the index funds. So that's about the friction and about the institutions not wanting it, not the individuals. The individuals obviously want it, but these companies are the brokers are catered to everyone, and institutions are a lot more lucrative than individual.
All right, and with that, we're heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. We are going to be hitting on a stock that they just added to the portfolio, and there's also a stock that a little birdie told me that you're thinking about selling. So I want to hit on those over there. Come join us. I'm Katherine Ross, and we'll see you Monday.